All right, we're Tesla shareholders, wise in greenlighting Elon Musk's trillion-dollar pay package. October job cuts were nearly 3 times that of September's. Is a recession coming? And finally, what might happen if the Supreme Court rules President Donald Trump's tariffs are unconstitutional? All this and the 3 most handsome guys in the business podcasting world on this edition of Curia Investment Show. As usual, I'm joined by my dashingly handsome Texan friends, Simon Erickson of 7 Investing and Eoin Treacy of Treacy Money. Guys, welcome again.
It's always good. You're looking great yourself.
Thank you. Generous introduction, James. I have to remember that one.
No worries. I got a new background, actually. I need all the help in the looks good department. So I can't do much here, but I can make up for it with lighting and camera lenses, right? Fun fact before we start, per the S&P Dow Jones indices, only 19% of the stocks in the S&P 500 outperformed the index average from 2001 through September of 2025. More specifically, over the past 25 years, the median S&P stock return was 59%. The average S&P stock return was 452%. So even in stocks, it's almost like a venture capital situation where you have a small number of stocks doing most of the lifting.
NVIDIA.
Exactly. All right. Speaking of stocks that have done a lot of lifting over the past so many years, let's go to Tesla. In Pope Leo's words, and this is a direct quote, "We're in big trouble." He don't think he likes Elon Musk's trillion-dollar pay package. Elon Musk is ostensibly a trillion-dollar man, except he's kind of not. Shareholders did vote to give him a $1 trillion pay package if Tesla hits a slew of almost outlandishly ambitious milestones over the next 5 years. Simon, you have been a Tesla bull. Are you still a shareholder, and did you vote on this?
Yes, I did not vote on this one specifically, but I do have a lot of thoughts about it, James.
What are those thoughts?
I've been a long-term Tesla shareholder, yes, for several decades now.
Gotcha. I mean, what do you think about? I mean, I was actually on BBC yesterday talking about the same topic. Tesla as a car company has had 2 years of declining car sales. If you apply anything close to traditional car company valuation metrics, the company would be like 90% overvalued, something like that. It seems outcompeted by Chinese EVs anywhere they're not banned. Regulatory credits were a big part of Tesla's profitability, and they're going away. So in other words, it looks kind of like Tesla is a big bet on Elon Musk, a big bet on robotaxis, a big bet on these humanoid robots. Both of those are factoring into this $1 trillion pay package. What do you make of it?
Well, I've never interviewed Elon directly, but I did interview his cousin, Lyndon Rive, who is the CEO of Solar City. And his advice on thinking about Elon was, he said, never bet against Elon Musk. He's known him much better than most of us do. And just Elon always, puts out these audacious goals that he achieves, right? He sleeps on the factory floor and works 100 hours a week. Now, the number itself is shocking. We hear $1 trillion. And of course, that's the number that grabs the headlines because we've never had $1 trillion, man or CEO or package or anything of this kind of magnitude before. But the number itself actually doesn't matter. Elon is already the world's richest person, and he already has got more than enough money to make ends meet in his own life. What does matter for Elon is control of Tesla. And he has said several times that he wants 25% ownership control of Tesla's decision-making. And if these numbers were to hit, knowing that Elon has about 15% ownership here today, it would balance out for him to be right there at around 25%. Now, why is that number important? Because Elon wants to say that if he can get enough votes to equal his own voting, so 25 plus 25, he would have, in essence, a 51% share to push decisions through. Elon doesn't want the frustrations of having to push uphill and try to convince a lot of people that what he wants to do is right. He just wants to say, if I've got my people that are with me and I've got my votes at 25%, he can push through some wonky ideas. And we know that Elon has had no shortage of wonky ideas in the course of Tesla's history.
Interesting. I mean, I was wondering, frankly, he's got 15% or 15.7% of the voting shares now. 25% is still not close to a majority, but it's closer. He ostensibly says it's not about the money. It's just about getting those extra 10 percentage points of votes. But apparently per NASDAQ requirements, you can't just grant somebody extra votes or create some super voting share class out of the blue. and give it to somebody. There's not really an investment banking workaround. He has to get the vote. In order to get the votes, he has to get the money, and that's kind of how it all came together. I mean, I guess it's weird. It is what it is. Owen, do you have you have any thoughts about this, Owen? I know you talked about it a little bit in your note to your subscribers the other day.
Well, there's a couple of different ways of thinking about it. I think one is, if they are talking about $1 trillion, it tells you that the money in your pocket is really not worth all that much. If they're bending around, hundreds of millions for CEOs, then it was billions for CEOs. And then you've got Meta handing out $1 billion pay packets just to come work for them. And now you've got Tesla offering $1 trillion. Well, it just tells you that your money is really getting devalued fast. So that's one way of thinking about it. But the other is, that Tesla might as well just be called Musk. That the whole thing about it is that it is a bet on Elon Musk and his ability to deliver new stuff. And talking about Tesla as a car company, I think is not really accurate, because it was a car company, and then it was a battery company, and then it was certainly really survived because it dominated, the credits. So it was really a political arbitrage company. And now the big bet is that it's going to be the future of AI. It's going to be the future of autonomous driving. And then it's going to be the future of robotics. Now, maybe it will. And if it is, well, then the chances are that he is going to reach all of his metrics. What I think is really interesting is that, you talk about self-driving, and you talk about, the challenges and how long that has been going on for, because the first claims about self-driving were nearly a decade ago, and we're still not there. But the more important point is that all the computing for that AI happens in the car. We're not talking about Tesla going out and raising a couple of trillion to build a data center network to figure out how to drive cars autonomously. All of that compute is happening in the car. This is very different AI from the large language models that we've had over the last several years, and the massive infrastructure build that's going in to try and get that right. This is a very different form of AI. It's a completely different bet, in fact. So I think, what we're seeing with the bid for control, but really what it's really is a bet that maybe they can figure out something else, that it's an alternative. In fact, I would say that Tesla is really a hedge against all of the massive investment that's going on in the other big mega cap companies.
Interesting way to look at that. Yeah.
One other thought about this too, especially regarding the point that we should rename Tesla's ticker from TSLA to MUSK, like Owen pointed out, is Elon has got a lot of ventures going on, but he doesn't think of Tesla as his sole project, right? These are all interconnected. He's raising financing for himself backed by guarantees of Tesla's capital. He is now considered using the vehicles, like Owen just mentioned, and the computing that's being done in the vehicles to power Grok, which is being used for XAI. And of course, he's also got SpaceX. And let's not forget Twitter, which he sold $20 billion of Tesla stock to go out and buy Twitter, which is certainly not very related to Tesla's operations, at least at the time being. So I think it's fair to say that Elon is not just going to use this $1 trillion only as a compensation package for things that he wants to do at Tesla. This is going to fund Elon Musk's other ventures, whether you like those or not. But that's a lot of money. $1 trillion can make a big impact in the world, especially for someone as smart as Elon Musk is.
Yeah, I mean, he's got to take the market cap from 1.4 billion to 8.5 trillion to get that. But to your point, Simon, Elon's got a million ventures, even Neuralink, Boring Companies, 15, 16 kids do we know of also. He's got a lot of competition for his time, but Tesla is where his money is. And if he had left, I wouldn't be surprised. I mean, there's a huge Musk premium, to Owen's point. I mean, I wouldn't be surprised to see the stock price collapse 50% or more without Musk, because as just a pure car company, it's just not that great, right? And it is largely a bet on these future things. So he needed this deal to work out, basically, in my view. Totally, he's Elon Musk, but it certainly was very, very helpful, and it would have been kind of a catastrophe for both Musk and for Tesla shareholders if he didn't get the votes.
Yes, and the goals themselves specifically, they're tied in tranches, like we mentioned earlier. It's not just tied to Tesla's market cap, but also 20 million deliveries annually of electric vehicles. That's 10x from what they delivered
Yeah.
last year. 1 million autonomous robots, which is a prototype right now. They aren't even
Yeah,
shipping.
they got like 200 in existence now, something like that.
These are audacious goals that if you put them in front of anybody else, everyone would say, oh my gosh, that's just not going to happen. You put them in front of Elon Musk, everyone starts, it's almost like a marketing stunt in some ways, James. They're just like, everyone starts thinking, can he really pull this off? Can Tesla really be worth twice as much as NVIDIA is today, which is the most valuable company in the entire world at $4 trillion market cap? Maybe. Or maybe this is another, planning it in your mind like Elon's so good at.
Yeah, there's just the last thought on this. I mean, he's a genius. He's clearly brought all these things. He's done 15 different things where most people can't even do a fraction of one. Right? He's amazing in business, and he's tremendously exceeded expectations in many respects. But he's also fallen short of promises many, many times. Also, so there's both perspectives. But I think one thing is true: if there's anyone who could pull this off, it's Elon Musk.
Yeah.
So, all right. So, speaking of totally different topics, Eoin, U.S. companies in October announced 153,074 job cuts. That's nearly triple September's number of 54,064, according to private firm Challenger Gray and Christmas. You expressed concerns to your Fuller Treacy Money subscribers that worsening U.S. job reports, or in this case, job cuts, mean a higher chance of recession. We have two things going on. The job cuts are higher than any October since 2003, but overall, unemployment is still pretty close to historically low. Why are these job cuts worth worrying about?
Well, I think there's a couple of things. Is that we had an inverted yield curve for a long time, and you can't have a recession unless unemployment is going up, and unemployment is going up, and it's above 4% now. So if you're going to worry about a recession, some of the things that would kind of fall into that category are starting to flash. So you do have to pay attention when things like this happen. Now, I think there's a lot of misrepresentation about what's going on, because everyone is saying, oh, it's AI is leading to a lot of job cuts. And I really don't see that as being an issue. I think the biggest impact of AI really is that maybe they're making hiring decisions about how many junior people to hire rather than any kind of job cuts from more experienced people.
So non-hires versus actual cuts, a little different there. Yeah.
Yes, absolutely. And if you're a salesperson and you're using AI, you can get an auto dialer, so you don't have to make the phone calls yourself. It will literally make the call for you, make the connection, and ask the person if they want to talk to you, and then you have your call. So instead of dialing and
getting those phone calls, right?
Absolutely, but if you're a salesperson, you
that makes
have
sense.
to make your.
Yeah, you need to
you're
cover
making
calls.
50 calls a day. You're doing it in an hour. You're not doing it in 4 hours. That's a massive efficiency gain. So that's a great thing for AI. That's going to make salespeople more efficient, right? But if you're getting job cuts, and it's not because of AI, it's got to be for another reason. And well, what's that other reason? Well, I think interest rates were too high for too long. We've had massive disruption in the labor force. You've had the biggest inward number of people coming into the country, illegal, legal, or otherwise. That was a huge bump in the workforce for several years, and now it has stopped. And that removes a lot of demand from the economy. You have companies like CarMax, really going down hard now because you don't have people buying secondhand cars. You have people leaving their cars behind. That is something that has an impact on the wider economy. But what it means is, this K shape that you have, that everyone's talking about, the K-shaped economy. Well, you've got millions of people working in technology. You've got hundreds of billions being invested in capital infrastructure. But then you've got people working for a living that are completely outside of that. And you have, the major, I think, CEOs of restaurants. There was a CEO of Applebee's was talking this week saying that he's got higher income people now turning up more and lower income people not turning up to eat in their restaurants like Applebee's or IHOP. Well, if people are trading down in the dining experience, Well, the next thing they do is they just stop eating out. Now, you've got DoorDash, which pulls back really sharply this week. And that was on the back of missed earnings. Well, getting your food delivered and paying the premium for the delivery and then paying the tip on top of that, it generally means that your dining experience, when you have food delivered, is 50% more expensive than just going and picking it up yourself. Well, you don't do that. You don't worry about that if you've got lots of cash, but you don't order out if you are really troubled about what you're going to spend your money on in a month and how you're going to manage your budget. So I think that there is pressure, at least in 50% of the population. And that is something that means interest rates are going down. We had the Federal Reserve saying, oh, well, every meeting is live. I don't think it is. I think we have had interest rates too high for too long. It's affecting at least half the economy, and particularly those that have to get up in the morning and work for a living. And they are really hurting, and they need lower interest rates.
Yeah, and that's been the kind of the catch-22, the Sophie's choice of central banks, right? I mean, I feel bad for central banks because they can never do any right. There's always someone who has a criticism, but they do. It's a balancing act. Their job is literally a balancing act, right? We had high unemployment was their concern, but we also they didn't want inflation. And if maybe they didn't have interest rates so high, maybe we would have had some kind of runaway inflation. Also, I don't know, but it's a tough balancing act. They had interest rates too low for too long. Jerome Powell did, obviously, prior to COVID, and we didn't have inflation for the longest time, and it just seemed like, where's the inflation? Then suddenly we had this asset price inflation, basically, because the money went into investments, and eventually it made its way into the real economy. So maybe this is kind of like the overcorrection you're saying. Is that accurate?
Well, I think it's that we're kind of, I think it's like we're getting almost like 30 years of data in about 3 years, where you get just a surge of people coming in, a surge of people leaving. You get a surge of money that's coming in. You get, central banks then, inflating their balance sheets. You get contracting their balance sheets. These are hugely volatile macro events that are happening in very short periods of time. And that is a seed bed for volatility.
Fingers crossed. Fingers crossed. Simon, were you about to drop some wisdom?
Maybe, or maybe just kind of reinforce the fact that volatility is the right word. And, Powell and the Fed has traditionally been data-driven, which means backward-looking and kind of responsive to things rather than being proactive on what they want the economy to be, right? You've got shocks that come up, whether it be COVID in 2020, and then all of a sudden everybody's got free money and is going out there and spending too quickly. So now all of a sudden we've got too much inflation. So you raise rates 7 times in 2022 to try to bring it back, and now we're still suffering from that 3 years later. I mean, it is a delicate balancing act, like you mentioned, James, but I feel it's also one that overcorrects, and then there's pain that happens, and then there's pain the other direction a couple of years after that too. Difficult challenge, the dual mandate of the Fed.
Totally. And just to underscore the confusingness of it, this is from yesterday's Wall Street Journal, small little article, private sector adds jobs. Nonprofits have been getting killed. Obviously, government jobs or federal government jobs are at least many of are furloughed. They're waiting for their paychecks, but apparently the private sector is bumping up. Very confusing because it seems to not jive with the job cuts, but sometimes these things can happen, or always these things can happen at the same time. And just a reminder for those listening, because of the government shutdown, we are essentially relying on private data. We don't have the normal BLS data, so this is kind of speculative, but is probably pretty accurate, at least in my view, in terms of directionally accurate. All right, so I will shift gears to our final talk. Before we get to our 3 stocks, which is what I think a lot of you guys are watching, this is tariffs. And I will preface this in the sense that everything I'm about to say is speculation. The Supreme Court heard the arguments for and against Donald Trump's tariffs that were invoked under the International Emergency Economic Powers Act the other day. We don't know exactly when they will decide, but it's likely it will not be until June of 2026. So we will be waiting a while. It's really a test. I mean, it's the issue, but it's really a test of separation of powers. The prediction markets are saying there's a 30% chance, just a 30% chance, the Supreme Court will say these tariffs are okay. That means there's 70% chance that they're not. From my own reading and from just the reading of legal scholars that I've checked out, just a handful of them, to me, it seems pretty clear that they're not okay. I mean, these are taxes, and the U.S. Constitution is pretty clear that only Congress has the power to level federal level taxes. The real question is what happens if they are deemed illegal. Now, as a side point, this is my own commentary here. The logic Trump cited when invoking them was economically flawed. I mean, what he was calling a trade barrier, this is on Liberation Day, he had this chart, was really just mathematically the difference between exports and imports. And by that measure, Simon would have a trade barrier with his supermarket. Elon, you'd have a trade barrier with the last car dealership you bought from, and I would have one with a bunch of 900 numbers. No, I'm kidding. No, nobody under 40, nobody under age 40 gets that joke, I think. In the 1990s, these 900 numbers were common, and there are probably some fortune-telling astrology kind of things, but most of them were, the dirty talk over the phone. And a fun fact, by the way, my first credit card, the first time I had some kind of illegal charges, I got this bill for like $4,800, and it was somebody calling a 900 number on my phone for like 10 hours at a time. I mean, come on. I mean, it's stamina, right? That's stamina. And the company was a little bit skeptical, like, Mr. Early, are you sure you didn't make these calls? I'm like, yes, I'm sure. So they did refund me. Anyway, back to the matter. Supreme Court has a 6-3 conservative majority, and 3 of those conservatives were Trump appointees from his first term. The Senate has passed 3 separate bipartisan resolutions expressing disapproval of this, which doesn't really mean much because in the House, Speaker Mike Johnson won't bring the House to vote on this. But in general, Congress doesn't seem to like the idea of Trump doing this. Here's how I see this, and I'd love your views, guys. The U.S. has collected, as of late October 2025, $224 billion roughly in tariffs, which is roughly $142 billion more than the same period last year. Wall Street is already making bets on what would happen if the tariffs get refunded. U.S. GDP is what 30 trillion now, something like that. Maybe no, 20 something, 25 trillion. I forgot. As a number, these aren't that huge. I think the more significant factor is the separation of powers issue. In other words, like credibility in the U.S. If the Supreme Court says, yes, these are legit, and I'm speaking as a centrist, I'm speaking apolitically, but that would seem kind of scary in the sense of the president would have almost unchecked power, at least in the eyes of the global economic community. But that's my own bias. That's my own view. So I see it less of an economic issue tied to tariffs specifically and more of a global credibility issue. But you guys may have smarter things to say on that.
Well, think about it this way. It's about division of power. And that is really interesting to me because the thing that's going on right now is you've got President Trump saying that we need to get rid of the filibuster. And the Senate is not particularly keen on that. And the House is not particularly keen on that because you get rid of it. Yeah, you get to pass whatever you want now. And so does the next government and the next government and the next government. And you lose a lot of your power to obstruct the opposition. They don't want to get rid of that, and they're not going to get rid of that. Now, think about this then in terms of these tariffs. Well, the taxing powers in Congress, they're not going to give that up. Now, are they going to let the president do whatever he wants in terms of putting these tariffs on and see how long it works for? Sure. Are they going to give him the power to actually say about what kind of taxes will take place? There's absolutely no way Congress is going to do that because if they did, there'd be no point in having a Congress. That's their central power. That's what they do. They decide on where taxes go and how are taxes raised. And without that, there's really no purpose for Congress. So they're never going to give that power to the president. But that doesn't mean tariffs come off or they come on. Now, they could vote. They could simply say the tariffs such as have been imposed are legal and that they last for as long as this presidency lasts. They could easily do that, but they're not doing it. then there's the additional point that there are lots of different other ways that they can impose tariffs. So the way that they've been done so far was the broadest, but there are plenty of other narrower ways to impose tariffs. And that means that the refund, it wouldn't even happen. They would give back some money and then they'd raise it somewhere else. So I don't think this is a market driving event. I think that really this is more politics. It's about power, but not really a factor in how the markets are moving.
My own bet, Owen, and I'm glad you mentioned that. And I brought this graphic up from Bloomberg. They did a great piece on like 5 other ways you could impose tariffs. Now, they are all logistically more difficult and his hands are more tied than the IEEPA. And that's probably why I choose that one, because it's frankly the easiest. But there are other ways you can do it. I would not be surprised at all to hear the Supreme Court say tariffs are technically, Trump was wrong to impose them under the IEEPA, but he can still maintain them under some other auspices, and we're not going to do any refunds. So in other words, a slap on the wrist, but still business as usual. And that would probably be a nothing burger to the markets.
I agree.
All right. So let us go to stocks. I got mine. I'm waiting. But Owen, while you're on a roll, what stock or investment idea are you looking at this week?
I'm really interested in Pfizer right now. So there's a little bit of a war going on between Pfizer and Novo Nordisk to buy this little GLP-1 company called Metsera. And really, I think it's Novo is trying to stop Pfizer getting into anti-obesity. They do pretty much the same thing as Novo. So Novo keeps raising their offer. And they're terrified of a big, well-capitalized company like Pfizer getting into this business. I think Pfizer is definitely going to get into anti-obesity. If it's not through this acquisition, it'll be through another one. And the share's cheap. So I think cheap is really interesting in this market because there's a lot of really overvalued stocks. And Pfizer has come back all the way. It popped on the upside when the announcement of the, the easier tariff was announced. Now it's right back where it was before that big announcement on the removal of tariffs. I think that this is a new bull story. I think that there's a really solid possibility that this is going to rally. If it gets into anti-obesity, it could be a real game changer for the company. But then we're also in a period where volatility is higher and value stocks generally do better in that kind of environment.
And down an 11.5% over the past year. So it could be a value play of sense. Simon, what are you looking at?
James, I'm going to go with Train Technologies. TT is the ticker on this one. A super sexy growth play that makes air conditioners, right? It's probably got the HVAC system in your home. There has been an upgrade. The EPA has mandated the coolant and refrigerant that is used in cooling systems be changed. We used to call this Freon. Now it's called 545B, which is a little bit less exciting to say.
Sexy name, yeah.
A mandate that there's an update in the coolant that's being used in HVAC systems. It's leading to a massive shortage in the residential market. Residents just can't keep up. And of course, Train missed its own outlook for the residential market just because it didn't have enough supply of the product. Meanwhile, its cooling has been red hot, pun intended, for the data center market. The applied HVAC market, which is a more complex systems, has been an all-time high in quarterly billings. And the booking to bill ratio is greater than 100% in all of their geographic regions. So it's just an interesting industrial company. Obviously, cooling systems are very important to data centers and where the supply is certainly constrained. You've also got a constraint in the residential systems because of this upgrade in the coolant. It's just an interesting company that tends to outperform over the last decade that is at a little bit of a sell-off here recently due to factors outside of its own control.
Still decent performance over the past year. I was showing the stock chart, and then I happened to see they were headquartered in Swords, Ireland, which is in New York, but I guess I'm not sure where their domicile. It's a PLC is the suffix, so it's a Irish company, I guess, underneath, just north of Dublin. And I say
no, it's a U.S. company.
U.S.
that has its tax domicile in Ireland.
Okay, yeah. There's a lot of Irish companies under under
Exactly.
that guise, basically. Okay, so there's really nothing really Irish about it, and maybe like one guy ever went to Ireland to sign some papers.
Ireland is probably the only country in the world that has no air conditioning. Right? So this is not a natural place for a company like Train to evolve.
One of their brands is American Standard. I was wondering, are we changing that to Irish Standard? I mean, you got to stay modern, right?
All right, yeah, decent performer too, and I like that it's a solid company in the sense that it's not sexy, it's not going anywhere. No one's ever going to be blown away by this company, but it's probably, if you're somebody worried about the AI bubble, this seems to sidestep, or potential AI bubble, I should say potential. This would sidestep that entirely. All right, so my company, I'm going dumpster diving in a way, kind of Owen-ish, a hated stock that's probably too hated. It's Kimberly-Clark, maker of Huggies, Kleenex, Cottonelle, and a few other things. Let me just bring up the unattractive stock chart while I'm here. This is the past year, down something. Let me see what down, 23% in the past year and 28% in the last 5 years, down more than 16% over the past 5 days because they're buying Kenvue. This is subject to shareholder approval and regulatory approval. Kenvue makes Tylenol, Band-Aids, and Listerine, buying them for about $42 billion. That'll make up about 46% of the new company, give them $10 billion brands. Pre-deal, Kimberly-Clark was just under $20 billion in revenue and about $2.5 billion in profits. So Kenvue will add another $15 billion in revenue and supposedly $2.1 billion in cost savings. Kimberly-Clark, dividend king, 54 years of consecutive increases. So why don't investors like this stock? I mean, this is a company that makes money. It reminds me of in high school, there was some kid, a pretty good looking guy, very athletic, smart guy. You know, I liked him, but he didn't connect with the ladies. And maybe this is the pot calling the kettle black here, but Kimberly-Clark is kind of that guy in the stock market. Like, you want to like it, but there's just something about it that doesn't work. I think it's generics are competing with the company. I looked over my house, Costco tissues, Target tissues, you don't have to buy the Kleenex brand anymore. And Tylenol. Tylenol's got a lot of headline risk. Tylenol itself is only about $1 billion brand. That's not too huge, but it certainly come under fire for this autism stuff and RFK. And apparently the studies are not that solid linking Tylenol to autism. He kind of was a little jumpy, at least according to most medical experts. But from a headline perspective, it doesn't look very good to see that equated with the stock you're buying. Acquisitions mostly don't work out. I think overall across all markets, something like 80% of acquisitions don't work out, except for the investment bankers. So the bear case is you got one turd buying another turd, and you got one big turd. The bull case is you've got something that is pretty cash generative, is beaten down, and could be at an attractive entry point. So with that, those are our three stocks that we're looking at. I'm going to bring on our analyst, Xiaoping, who may have some questions that audience members may have submitted. Xiaoping, oh, there you are.
Hello.
Questions for us as we wrap up.
Yep. The first question is from Mia. Are investors too focused on AI and tech to see the broader economic weakness?
Yes, 100% they are. That's why the S&P keeps going higher, is because of the Mag 7 and the largest constituents in the index, which I believe the top 10 are now, what did we up to? 40% of the S&P
40%, crazy, right?
I mean, that is, when you say the market is doing well, it's masking the fact that consumer discretionary and a lot of the stuff we talked about earlier in the show is really struggling right now. I think certainly.
Okay, the second question is from Brian. What would happen to Tesla stock if Elon Musk walk away?
Yeah, we don't know, but Elon's certainly been threatening that, right? He says, if you don't give me enough ownership, I'm going to walk and go do it somewhere else. I don't think that's very shareholder friendly in any sense to basically threaten your investors to say, give me what I want or I'm going to walk away. It seems more like it's for Elon's benefit rather than for shareholders' benefit. I personally think that the future of Tesla, and we've talked about this many times on the show, is AI related. Owen mentioned it earlier on the live stream. Is Elon the right guy for AI? I think he is. I think he'll do well with this. But I also think there's a lot of talented people that have even come and gone from Tesla that would be capable of pulling off the robotaxi network and the data centers that Tesla is building right now. The question is, do you want to be tied to Elon, who is moving a lot of different chess pieces around the board? I think that's the key. I think that it almost certainly would sell off. I think that there's too much faith in Elon and too much question and uncertainty. If he was not there, that the stock would sell off if Elon walks away, maybe 20 or 30%, maybe even more than that.
But given how much of his net worth is tied up in Tesla, and especially given the vote yesterday, I would think he's much less likely to walk away. But you never know. He's Elon.
Yeah, he's being pushy because he can. And, he's built a lot of reputation. He built Tesla from being a car maker to being what it is today. Very impressive track record.
Yep.
Okay, the third question is from Oliver. How does the tariff debate affect investors exposed to global supply chains and trade-heavy sectors?
I don't think it's going to get any worse. I'll say that. I mean, the tariff debate is basically now in the hands of the U.S. Supreme Court. And as we were just talking about, there's a chance they just nix them or nix the incremental tariffs that Trump added under the IEEPA. But frankly, I think, and it sounds like Eoin thinks too, and maybe Simon as well, that's almost not the likely outcome. So in other words, I think it may be just the status quo. It may get better. I don't think it's going to get worse. I would be surprised if we saw additional tariffs. So whatever, I think it's baked into prices is my short version.
Well, I really think though that we have to kind of also consider the bigger picture is that, tariffs were introduced as a tool, and it's not just about money. It's trying to encourage encourage companies to diversify their supply chains. That's what it's really about. You want to bring back manufacturing, or I think it's not even bring it back. You want to diversify manufacturing away from China. It is geopolitically stupid to rely on one country that is a major competitor to supply you with almost everything that you need. And if tariffs were the kind of the stick to get people to do that, well, the taxation and the support for business is kind of the carrot to do it here. But what we're definitely seeing is more resource nationalization. That's another part of this exact same strategy. Nationalization of supply chains, thinking about geopolitical security, not just about profitability. That is something that is a durable theme, regardless of what happens about the legality of the tariffs.
I agree with that, Eoin. I think and part of that means deglobalization in favor of additional national security, and that can make sense to do that. And let me just add a point. Everything I said before, I stand behind. I might have almost been a little unfair to Trump in one respect, in the sense that, yes, it doesn't make any economic sense to assume fair trade is equal trade. It's not the same thing. You're not going to buy and sell from your supermarket in equal quantities. They're not going to buy from you. There are certainly bad actors. There are unfair trade practices that the U.S. should stand up to and should take action to address. And in certain cases, a tariff or an export restriction, there are a couple of ways you can do that. That can be appropriate. I think that the blanket tariff applied with a very, very simplistic formula across a bazillion countries is not the right way to go. And I think that's really the issue at stake here. But I am all in favor of getting smarter about trade. And it sounds like Eoin more articulately than I did express that same sentiment.
Okay, so the last question is from Amy. What metrics or leading indicators are you watching for where the economy is really headed?
Eoin, is there anything better than employment data? I mean, that's kind of the granddaddy.
Well, the economy and the market are two separate things. So I would certainly look at unemployment data, and I would be looking you got to think about, how's your life going? How's the life of the people around you going? If people that are losing their jobs, well, then that's a real warning. And if you start losing your job, well, then you really are thinking about there's a recession coming. But in the market, something you need to pay attention to is the fact that trends have been going up and they're starting to roll over. So that certainly tells us that there's the potential for trouble. We had an inverted yield curve for a long time, and it is now de-inverted. And it is exactly at the point that if there's going to be trouble, it's when it should start. Now, if they start back on quantitative easing and they try to flood the market with liquidity again, then they can avoid a recession. But that means much lower interest rates and a lot more money printing. So we're at a critical juncture right now. Then I would also look at the advanced decline lines, and they're not going down. And if that is sort of a technical way of looking at the market. It's an index that takes all the companies that go up on a day, all the ones that go down, nets them out, gives you a figure. As long as that's rising, you're still in a bull market. On average, the market will continue to rise. If that were to turn around, and it turned around in 1998, it turned around in 2007, if that were to turn around, I would be a lot more worried. I think what we're looking at now is the potential for some consolidation, maybe a reversion back towards the peaks in 2024. I don't think this is an outright reversal, but if we start to see some of those leading indicators rolling over, well, then that warning would have to be a lot more serious.
There you have it. A little bit worried, but not a lot worried, it sounds like. Amy, I hope that answer suffices. Guys, it's always a pleasure to do these live streams with you. Appreciate your joining. Tons of wisdom we can share to the crowd. And if you have any questions, you're watching us, just email us, info@curiafinancial.com, or drop a note in the comments. We're happy to get back to you. Eoin Treacy of Treacy Money, Simon Erickson of 7 Investing. Thanks for joining us. And thanks to you guys, as always, for watching us at home.